You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading. I feel like I'm a little crooked today. And welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, go over the market, share some thoughts, and once in a while we'll share our trade of the day. We are live on YouTube. We're live every morning, 11 a.m. I got the chat open. John, George, Chris, Siri, everybody else, thank you so much for joining us. Thursday, Jimmy Carter is passing away. So sad. Sorry. Market's closed. Kind of weird the market's closed, but market's closed. Bonds might be open for a little bit of the day, but it's kind of a weird day. Thursday, the market is going to be closed. And then Friday, the market's going to be open. It's usually the Friday is closed, but it is what it is. So just be careful of that. Your options are going to obviously decay on that Thursday as well. So something to take a note of. What are we going to talk about today? Well, yesterday, we shared a little idea in the QQQ. It got away from us pretty quickly. We'll go over that. We'll talk about how our community dealt with that trade. And then I want to talk about Uber. Uber is thinking, if you're not going to buy our stock, we're going to buy our stock. And that's what they're doing with a very, very big repurchase plan. So let's go over the slide deck. Hey, Bill. Thanks for the chat. Let's have some fun. Here we go. Okie dokie. I got you here. I have the chat open if you guys have questions while I'm going through, but let's get going. Okay. Interesting thing happened yesterday. Now I get to share it with you guys all because here's what happened. We have our short-term options program. In our short-term options, we are looking for trades that expire in less than 3 or 4 days. So yesterday, shared a trade. This is how we share trades. Chris is my editor. I tell Chris, and then Chris goes in and we talk about, hey, here's a really good level to buy. Let's get in there and buy the 525 strike puts for 230 or better. We're going to risk $500 total on this trade. So the first trade, if you did a one lot, is $230 of risk. Then we would wait for a second trade. Well, some of our traders got filled. Great. But what ended up happening is in our portfolio, we paper trade every single trade that I recommend because we run a lily white trading service. Whenever I share a trade, we need to get filled in order for that trade to be actionable. Sadly, me being sad, the portfolio did not get filled. And we shared this trade at 11:11. Right after the trade, coincidentally, I guess, the market sold off. So sadly, we had to cancel our trade because we didn't get filled. But still in the community, we had some of our other traders that were able to get filled. Jerry had a really nice day yesterday trading ODTEs. 100% gain, 165% gain. Michael was able to get filled on his 524 puts. And then Brad got in his puts and yesterday was able to cover, locked in 60%. So that's how we run the service. Whenever we share a trade, we have to get filled. We can't just say we want to buy puts and then we automatically get filled. Nope. We run this lily white and we want to make sure that if we share a trade, that people know that they can get filled in that trade. Here's a trade that we had, CNX. Now, CNX is a trade that was shared all the way back in October. Since sharing this trade, we were buying puts and hoping and betting for it to go down. But since this trade, CNX just went higher. Now, what's very difficult for newer traders to understand, or even more experienced traders, how we trade at Masters in Trading is once we get into a trade, and this trade, say it cost $1. A trader could buy 10 for $1,000. Once you put that bet on, we are holding until expiration. We do not trade with stops. Whatever we're putting our trade on, that's our risk. And then either we're going to lose principal or we're going to be able to take off for a really big profit. We want to hold until expiration. This trade was terrible, awful, bad. But we teach patience, and we got a little bit lucky because this week CNX came flying off. The portfolio was able to make about 20% on its trade, no big deal, but we were down over 100, well, not over 100%. We were down about 100% on this trade because it was looking absolutely dead in the water. But we still held it. It came off. But when you share a trade and you have traders in a community, I always like to say 10 different traders will give you 10 different results. Here's what Kate did. Kate tranched. When we talk about tranching is getting into a trade and say you risk $1. We tranche 3 times. So you may tranche $1 here. You may tranche $1 here. And what you're doing is you're cost averaging into that position. Now, it takes time to get confident with this trade, but Kate here, so encouraged by this today, I had tranched into a higher strike. I got the 34 puts for only 53 cents. Well, now, with the stock at 30, those 34 puts are worth at least $4. Get on Prince, stay in your trade, and you take a trade that was pretty shitty. It came back that a lot of people just broke even or maybe a little bit, but if you stayed confident, Kate was able to make 589%. And that's a really good example of how 10 different traders will have 10 different results. Let me ask you guys in the chat, did anybody have CNX? And what did you do with your CNX position? Were you able to hold until this big move, or did you stop yourself out and lock in a loss? So if anybody in the chat had this position, let me know your thoughts. Moving on. Another thing we shared yesterday, SMCI, JR, they did not have earnings after the close. That was a mistake. I think they have earnings February 3rd. But yesterday, we shared this in our all access. SMCI was up 14%. Today, SMCI is the number one name on our advanced notice all access tool. Scrappy got in this yesterday. In 24 hours, he was able to make 34% on this trade. But very surprising that SMC was up 14%. And today, with the sell-off, SMCI sells off. Pretty cool trade. Let's talk about Uber. So ride sharing, we have Uber, we have Lyft. I hear Waymo's taking hold in San Francisco and in Phoenix. Well, I've taken some ride sharing. I've only taken Uber. Why? It's the only app I have on my phone. I got nothing against Lyft, but it's just convenience. That's why I've been using Uber. But Uber has announced a share repurchase plan. Now, common sense, when a company is going to buy their own stock, that's a pretty good sign, right? That should give us confidence. February 14th, Valentine's Day, Uber's director offered the buyback of $7 billion of common stock. January 6th, yesterday, Uber entered into an accelerated share repurchase agreement to repurchase $1.5 billion of that $7 billion. So what ended up happening, and if I go to the chart, February 14th, Uber, strong moves, confidence in the company. It sells off. Well, right here, Uber says, hey guys, if you're not going to buy our company back, we're going to buy 1.5 billion shares at a lower price than we did that first tranche going back almost 1 year ago. So Uber buying their stock is a very, very bullish sign and something that we should watch out for. Uber, Lyft, and I actually, let me hop on here live. If I can find my mouse. There we go. Also, I want to say, I heard a little rumors of maybe Amazon looking at buying Lyft. I think somebody will eventually buy Lyft, but it's a really, really good sign that Uber is going in and buying and borrowing money and just doing another 1.5 billion to gobble up their own stock. For everybody in All Access, you guys don't go anywhere. For everybody else, I'll see you live tomorrow, 11 a.m. Eastern time, guys. Thanks for watching.